Good evening. This is Jackie Knight with STC. Thank you so much for hanging in there with me tonight. This evening's webinar is a special one. It is a Q&A for you. I do begin this webinar with a bit of information about self-directed retirement account investing, so I will do that very quickly so that we can get to your questions. That STC is a retirement plan administrator only, and we do not provide legal, tax, or investment advice. We also don't represent or sell any securities or investments of any kind. We are not a registered investment advisor, and we don't recommend or endorse any particular investment opportunities. We do recommend that you consult with your legal, tax, and investment advisors prior to making any investments. This evening's webinar will start with a little bit of information about self-directed retirement accounts, investment options that are available to you, guidelines that must be followed, the retirement account LLC structure that STC uses, the services that we offer, and then we will open the floor for your questions. If you already know some questions that you would like to ask, please do feel free to type those into that question box that you can find on your task pane. You simply click the plus sign next to the word questions, a box will open, and you can type into that. Thank you. So we'll start first with what is a self-directed retirement plan. A self-directed retirement plan is one in which you hold your account with an administrator or custodian that permits you to choose any type of asset that is permitted by law. So that would mean you could include what some consider non-traditional assets like real estate in your retirement account portfolio. Self-direction also means that you manage your retirement plan's investments. So if, for example, you held a rental property in your retirement account, you would be the one as the account owner who decided what rental rate to charge, if you were going to put in new appliances, fix the roof, or if at some point down the road you wanted to sell that property. You would make all the decisions that relate to the investments in your account, meaning you have full control in a self-directed retirement account. Now, there are a number of different types of retirement plans, and any of these can be self-directed. You simply hold them with a company that permits self-direction. Traditional IRA, Roth IRA, you may be very familiar with those. You can contribute from earned income each year into these accounts, and the difference between these two types of accounts is that a traditional IRA, like most retirement plans, contributions are pre-tax. In other words, you get a tax deduction for the amount that you contribute to your IRA with a traditional IRA. With a Roth account, your contributions are post-tax, so you do pay taxes on those contributions. The big difference with a Roth account is that when you take distributions after reaching retirement age, the distributions are not taxed. So the money that you earn in a Roth account, when you take that out at retirement age, basically your retirement account has earned that money tax-free. So that's a big advantage of a Roth account. In 2016, the annual contribution limits for these two accounts is $5,500 of earned income, or $6,500 if you are 50 years or older. A SEP is a savings simplified. Excuse me, one moment. A SEP is a simplified employee pension plan. It does have larger contribution allowances, and some small business owners or sole proprietors may use a SEP. A simple is a savings incentive match plan. Again, partnerships, small businesses, sole proprietors may have a simple plan as well. Different contribution allowances, but those plans can also be self-directed. I brought out on your screen 4 plans that say former employer. A 401k is a for-profit corporate plan. 403b, often used by charitable organizations. TSAs, tax-sheltered annuities, TSPs, thrift savings plan. If you formerly worked for an employer and participated in any of those types of plans, you can move those monies out into, say, a traditional plan, or if you qualify for a SEP, into a SEP, and then you could self-direct those funds. If you are currently employed and participating in one of these types of plans, you will need to check with your plan administrator to see if you can move money into a self-directed plan. That would be something you would need to discuss with them. And then, of course, a regular 401k plan is a regular for-profit corporate plan, and these can be set up so that they are self-directed as well. Now, with a self-directed plan, you have very many investment options. You are not limited to stocks, bonds, and mutual funds. You can invest in real estate and a variety of different types of real estate. Single or multifamily homes, vacation investment property. You'll notice I say investment property with vacation, because if your retirement account does invest in vacation property, you personally may not use that property, because that would violate some of the prohibited transaction rules that the IRS has laid out. So it does need to be investment property, but you could own, say, a rental at Hilton Head and rent that out for folks to vacation in. Tax liens, raw land, building lots, commercial buildings, real estate syndications. All of these are permissible assets in a retirement account. You can also make loans from your retirement account. You can purchase mortgages, real estate-backed mortgages. You can make private business investments. In other words, invest in an operating business. Certain precious metals may also be owned by a retirement account. You can invest in the foreign currency market, options and futures, and of course you could have a piece of your self-directed account in stocks, bonds, and mutual funds if you like. There are guidelines for self-directing, rules that must be followed, IRS, Department of Labor rules depending on the type of plan you have, and this applies to all retirement accounts, not just self-directed retirement accounts. There are certain assets that are prohibited. You cannot hold life insurance contracts in retirement accounts. With one exception, a solo 401k plan can own a life insurance contract. In addition, collectibles may not be owned in retirement accounts. Things like rugs, works of art, stamps, coins. No coin collections. And there are prohibited transactions, things that your retirement account may not do. Transactions that you engage in your retirement account do need to be for the benefit of the plan, not to benefit you personally. You cannot borrow money from your retirement plan assets. You cannot pledge your plan assets to secure a personal loan. And you also cannot utilize your own personal credit or guarantee to obtain a loan for your retirement plan. Now, your retirement plan can get a loan to leverage a real estate purchase, but it cannot be a loan that you have personally guaranteed. It must be a non-recourse loan. In addition, your retirement plan transaction cannot benefit any disqualified person. So let's take a quick look at who disqualified persons are. And you'll see that the very first person I put out on the screen is you. You and your retirement account are two different entities, and you may not do a direct transaction with your retirement account. And if you are married, this would include your spouse as well. There are additional family members who are also disqualified persons. Ascendants, so that would mean your parents, your grandparents, on up the line, and descendants, that would mean your children, your grandchildren, on down the line, are disqualified persons. So for example, let's say that your brother owned a vacation property at Hilton Head. Your retirement account, not your brother, your father, your retirement account could not purchase it from your father or your daughter. However, lateral family members are not disqualified persons. So if your brother or your sister owned that property, your retirement account could purchase it from them. So you do need to be aware that some persons in your family are disqualified and some are not. In addition, there are two entities that are disqualified persons. Any company, if you're a majority shareholder in that company, meaning not over 50%, but simply a simple majority shareholder, or any company if you're an officer, a director, or highly compensated employee, then those companies, those entities are disqualified persons to your retirement account. So I do oftentimes have real estate investors listening and on my webinars, And oftentimes they are running a real estate investing business through a corporation or an LLC. If they own a majority interest in that entity is a disqualified person to their retirement account. So if, for example, they owned a property in that company, their retirement account could not purchase it from their company, just to give you an example of that type of situation. Now, STC does use a particular type of account setup with each of our accounts. We use an LLC structure. And what that means is for each client's account, we set up an LLC. It's a very specific kind of LLC. It's not a generic business LLC. Rather, it is one that has been created by our accountants so that its organizing documents fit the rules for ownership by a retirement account. So it is specifically designed to be owned by a retirement account. And we use this structure because it gives our clients maximum flexibility in structuring transactions. You can structure very complex transactions, multiple party transactions, transactions that use leverage, and using the LLC structure makes that easier to do. It does provide an additional layer of asset protection because it is a limited liability company. It also gives you checkbook control over your retirement funds, which means that you have immediate response to investment opportunities. We understand that good investments can come and go very quickly, so you want to be able to move on those. So we use this setup to enable that. Now, you'll notice that I have checkbook control in quotes. And that is because we do not give the checkbook to our clients for their account. Some companies do that. We do not, and we do that really to protect you. If you were to have the checkbook and you were to unknowingly engage in a prohibited transaction, there can be penalties for that. They can be severe, up to forfeiture of your retirement account. So rather than put you in that kind of a precarious position, what we do is you can, once your account is set up, you can fax us documents for the transaction you want to do, and we can same day or next business day fund that transaction. But what we will be doing is we'll be looking over those documents, and we'll be making sure that you don't violate any of the rules that relate to retirement account investing. So we'll make sure that your investment is not going to get you in trouble with the IRS. So you've got experts looking over your transaction, helping you make sure that they are structured properly and titled properly for your retirement account. But at the same time, we can same day or next business day fund that transaction. So it's like having, it is protected checkbook control. Using this structure also simplifies asset titling. Many of our clients do engage in real estate purchases in their retirement account, and because of the LLC structure, they can actually go to the closing of that property purchase and sign on behalf of the LLC and sign on behalf of their retirement account. They don't have to send the closing documents to our corporate office and wait for somebody there to sign off on those and get them back to them. Rather, they can actually go to closing. So it does simplify asset titling. Using this structure also eases pooling or partnering with other funding sources, because you can do that as well in a real estate transaction. So let me just show you a little schematic of our structure and investing. In this schematic, you see on the upper left, current custodian. So this would be where you currently hold your account. Of course, you can set up a new account with us if you like as well. You would complete documents that would direct your current custodian to move the funds to our self-directed custodian. We would be creating the LLC in the state of your choice. The funds move to our self-directed custodian. Once the LLC setup is complete, another document is executed that you've signed that directs the custodian to purchase all of the ownership of this LLC with all of the funds in your retirement account. your retirement account funds move to a bank account that your LLC has access to. So now you have that next day or same day business funding transactions. In this schematic, you can see that you've invested in 3 investments in your retirement account. Number 1 and 2 are wholly owned by your retirement account, but number 3 is co-owned with 3 other persons. And you can see that one part of it is owned by your retirement account, and then your father, your daughter, and some of your personal funds also own this investment. Now you may just remember a couple of slides ago I told you that these 3 people, you, your father, and your parents and your children, were disqualified persons. But if you partner and to purchase investment number 3 at the inception of the purchase transaction, then this does not violate the disqualified person rule. So we do have folks who want to partner with personal funds or a spouse's retirement account or family members co-invest retirement funds in an investment. And as long as we make sure that is structured properly, you can do that. Now I want to tell you just a little bit about security trust and our full service approach, and then we will open the floor for your questions. We are a full service administrator. That is all that we do. We administer self-directed retirement accounts. So part of our services is the retirement account LLC structure setup. We take care of all of that. We offer you that protected checkbook control. We have CPAs and attorneys available to answer your technical questions. If necessary, we can talk to your banker, your attorney, help them understand how the retirement account process, investing process works. We offer unlimited guidance on transaction compliance. So you can talk with our customer service department, email them, fax them, as much as you need to in understanding how perhaps to structure a complex transaction, parties to help get the documents for your transaction titled, set up properly. So that is all included in our service. We handle all of the back office support that is required for all retirement accounts. That includes an annual report, financial statements, regulatory reporting every year, and an annual valuation that must be sent to the IRS. So we actually do all of that back office support so that really all you need to do is focus on finding the best investments for your retirement account. So that is a little bit of information about self-direction. I am now opening the floor for your questions and answers. And if you will, just open the box by selecting the plus sign next to questions, and you can type your questions directly into the question box. And I will get that ready so that I will be able to see your questions. Okay, I have a few questions, and good, it looks like some more are coming in. Okay, the first question is basically an account setup question. What is the time frame to get my account up and running with STC? Typically, we ask for 4 to 6 weeks from the time that the original paperwork is received at our corporate office to have your account set up complete. During that time frame, we will coordinate the transfer of the retirement assets from your current custodian to your new custodian, to our custodian. We'll also create that LLC that I talked about. And we do keep you informed during the whole setup process via email, so we'll let you know where we are in that process. It does oftentimes take less than 4 to 6 weeks, but depending on where your funds are coming from, if it might be a government agency or some custodians take longer to release the funds into a new custodian, there can be things that can take extra time. Once your account setup is complete, then you have that same day or next business day funding of your transactions. And I'll just mention, we are located in Hagerstown, Maryland, so we're in the Eastern time zone. So if we have your documents for a fund, an investment by 2 p.m. Eastern time, and they're all straightforward, everything looks like it is in line with the rules and regulations, then we can fund that transaction the same day. If it's after 2 p.m., then we may not make our bank's cutoff time. So then it would be next business day funding. The initial setup, though, does take some bit of a time, but once your account is set up, then it's that 24-hour or immediate funding of your transaction. Okay. Okay, this is another setup question. Once my account setup is complete, what does STC require from me to purchase an investment, and what is the turnaround time? I've already mentioned that turnaround time can be same day or next business day. What we need from you is we have a form. It's called a request to transfer funds form. By the way, when your account setup is complete, you get a binder from our corporate office, and it will include lots of information and all the forms that you would need. We simply need that form back from you indicating the type of investment, the dollar amount, any appropriate backup. So if you were doing a real estate transaction, we'd need a promissory note, a HUD-1, and then we would be able to same day or next business day fund that transaction. Okay. Okay, though, lots of questions are coming in. Okay, we'll take this one. How do I get money to take to an auction? If I don't win the auction, what do I do with the money that was sent to me? What you would do, I get this question asked a lot for tax liens. I'm not sure what kind of an auction this is. Maybe it's a bank auction or a foreclosure auction. What you would do is you would take the notice of the auction and you would fax that to our client services department, and then you'd get all the specific requirements for how you would pay for that, and then client services works out how to get you money to go to that auction. And if you don't win the bid, then that money must go back into your retirement account immediately, or it will be considered a distribution. So every jurisdiction or auction can be different. I know with tax liens, they are often different. So what we ask each client to do is call a client services department in advance and talk with them about the specifics of your particular situation, and then they will work out the method that will work best for that auction. We can do zero balance bank accounts. We can send checks, from your retirement account to the seller. So we would just need to know the particulars, and that is what our client services department is very good at, working particulars, different circumstances. We will get you the money that you need, but the money that you don't use, it would need to go back into your account. I want to make that real clear. Otherwise, the IRS would consider that a distribution to you that would be taxable, and perhaps there would be a penalty levied on that. How do I set up an account to purchase stocks? What you can certainly do that in your self-directed account. You would open a brokerage account with whomever you wished, and that brokerage account would need to be in the name of the LLC that we have set up for your retirement account. And then what we would ask you to do, we would require you to do, is send us your monthly statement from that brokerage account. You can use your personal address for the LLC, but all of the transactions would be made in the LLC's name, and the monies would, come from your retirement account. So you would use that transfer of funds request form, and you could trade online, but we would need to see your monthly statements for that account to make sure that you weren't taking money out personally. But we do have clients who do that, and especially if you move money into your account with us, and maybe you're planning to do a real estate transaction or invest in a business or loan money, but you haven't got that transaction worked out yet, and you want to keep your money invested. Setting up that kind of an account can help you do that, and then you can liquidate the stocks or whatever you've invested in once you find the asset that you want. Okay, I did mention that you can make a loan from your retirement account. Does STC choose the terms of my loan? No, we do not set those terms for you. This really is a self-directed account, so you are going to be the one that's going to make the decisions that relate to your account. You'll choose the terms of the loan. Now, what we will do is, of course, we're going to review these loan documents, and we will make you aware if any of the terms of your loans are items that might raise a red flag in an IRS audit. You know, the IRS can audit self-directed retirement accounts anytime they like. So let me give you an example. Let's say you're loaning funds for 5 years at 1% interest. You need to keep in mind that the goal of your retirement account is to increase in value and benefit you at retirement. And you know, you're getting tax deferred treatment on this account for that purpose. So the IRS would wonder why you made such a loan at such a low rate when you can't get a rate that good from any other type of lenders. So we won't make you change the rate, but we will inform you that such terms could be placing your IRA at risk. Okay. How difficult is it to own rental property in this IRA? Would I need to keep plenty of cash in the account for repairs and maintenance and all the other expenses that go along with real estate investments? Would I be allowed to manage the property? Okay, I've got a three-part question here, so we'll walk through this. It's not difficult to own rental property. We have many, many clients who do exactly that. We do encourage our clients to use a property manager for rental property that's owned by your retirement account. And we encourage that because we want to make sure that there's an arm's length distance between you and your retirement account. Because you remember I said that you are a disqualified person through your retirement account. So we do strongly encourage that you use a property manager. And when you do that, that third party, that property manager, they would collect the rent. They would hold a retainer for emergency repairs or charges. And what they do is they charge a percentage for their services, and then they would forward the excess funds to your IRA LLC, along with a statement or breakdown of the rent and the expenses. So, and you do need to remember that you can't use a disqualified party as your property manager. So you couldn't be the property manager, or your spouse, or your mom, or your son, because they're all disqualified persons. Now, your brother or your sister could be the property manager, but not those ascendants or descendants, or yourself or your spouse. We don't require you, STC does not require you to keep a certain reserve for rental properties in your retirement account. But what you would need to remember is, you know, like any property, emergencies can arise. And if you have, let's say, the dishwasher in your rental property dies, you have to put a new dishwasher in. That money to pay for that dishwasher needs to come from your retirement account. You can't buy it personally because your retirement account owns that property, not you. So you do need to make sure that you have sufficient funds in the retirement account to take care of those kinds of things, or that you have the ability to make a contribution to the account. So let's say it's, you know, near the end of this year and you haven't made your contribution for 2016. and you need to do a repair, you could make that contribution. You could make it early, and then you would have that money again. So you want to be sure that you either have some money for emergencies or you're working with a property manager. We don't actually require you to use a property manager, but we do strongly encourage it because we want to make sure that you don't violate any of those disqualified person rules. Okay. What are the fees for the account? We do have an initial setup fee, and I'm happy to send anybody our client fee schedule. So if you would like that, just send me a little note in the question box, and I can do that after the webinar is over as well. We do have an initial setup fee that generally is $2,000, and that covers the setup of the LLC, the transfer of the funds through the custodian and to the bank account. All the fees that are covered by that. That $2,000 setup fee can be paid from the funds that you are transferring to us, or it can be paid for from outside of the account, in which case you can check with your accountant. That might be a tax-deductible expense. Then we do have an ongoing management fee. That's the one-time setup fee that is less than 1/4% per quarter. So it's 0.245. Less than 1/4% per quarter, 0.245% per quarter. We do have a minimum fee, and we also do cap our fees. Our minimum fee per quarter is $74 a quarter. Again, if you would like me to send you our client fee schedule, I will. I will say that for that management fee, all of our services are included. So you can spend as much time as necessary with our client services department. Talk to our accountants, our attorneys, whatever you need. No hourly fees, no transaction fees. So it's covered by our management fee. Okay, let me see. Sorry, just reading a bit of a long question here. Okay, if I want to purchase a bank-owned property, they often require verification of funds. How would I verify funds that are in my self-directed IRA? That's very straightforward, and we certainly do have people who do that type of transaction. What we can do is we can supply you with a proof of funds letter. So what client services would ask is that you call them or send them an email, and we'll prepare that proof of fund letters and we'll email it to you in less than 24 business hours, so we can get it to you very quickly. What we do ask is that we want you to tell us the amount to put in that letter, up to the full amount that's in your retirement account, the cash that you have available, because we don't want to necessarily put the full value of cash in that proof of funds letter. You may not want to use all of those funds in bidding on a property or whatever you need this for. So the amount cannot be more than the available funds in your IRA LLC the day the letter is prepared. However, for example, if you're bidding $90,000 on a property and you've got $200,000 in your account, you may not want that letter to say $200,000. You may want it just to say $90,000. So we'll ask you for the amount that you want to be in that proof of funds letter up to the available cash in your account. Okay, okay, this is a good question. Do I have to pay taxes on the income that is generated by my IRA? Generally, normally, no. You don't. Monies that are earned in a retirement account are tax deferred or tax free if it happens to be a Roth account until you begin taking distributions, qualified distributions, after reaching retirement age, which is 59.5 or older. Now, when you do take distributions, then those distributions are included in your taxable income, and you pay at whatever your taxable income rate is for that year you take the distribution. Now, there are a couple of exceptions to this, and I do want to mention those since they might apply to folks on this webinar. If you use a non-recourse loan to purchase property, then you may have to calculate UDFI, unrelated debt financed income, and that is taxable to your retirement account. I would say the majority of investments made by retirement accounts don't trigger taxes. But if you use a non-recourse loan to purchase a property and but you earn income from that property, or you sell it and you earn income, then you can trigger UDFI. There is another possibility that you could trigger UBIT, unrelated business income tax, if you invested in a business. Again, these are pretty rare, and so what we would suggest you do is that before you engage in purchasing a business, or investing in a business, or in getting a loan for your retirement account, you talk to client services about that, and we can explain a little bit about UDFI and UBIT, and then you can talk with your tax accountant and determine, oftentimes it's still a good investment, even if it is going to trigger taxes, but you want to be aware of what those would be and the returns on the investment and that kind of thing. Generally, the answer is no, but in some cases, yes, taxes can be triggered. Okay. Okay, here's a question. The person is asking, do we have to make contributions each year? And the answer is absolutely not. You're not required to make contributions, but you may want to make contributions from earned income, so that you're growing, you're getting more money into your retirement account that can earn tax deferred, but you're not required to make contributions into your retirement account, no. Okay, this is another question about a loan. Does a loan I make from my IRA have to be secured? And the answer is no, the IRS does not require you to have your loans secured. However, you want to think in terms of what's best for your retirement account, and your IRA's investment is more protected if it's a secured loan. And if you do secure the loan with some type of collateral, let's say, for example, you're going to make a loan to a rehabber, and they're going to use that money to rehab a property, and they're going to pay you back a set interest rate. You may want to have the property that you're lending to them for be collateral for that loan, or some percentage of that property, so that there is security on your loan. If you were to do something like that, then you would want to make sure that you have, in addition to having that collateral, that property listed in the note, that there's actually a lien recorded on that property too, so that your retirement account has that lien to its benefit. Okay. Does STC have a networking group that can get together to pool money to invest? No, actually we do not. We're not permitted to do that. We do have a Facebook page that you can, put things out there for other folks to see, and then they can contact you. Many of the people that I talk to look for real estate investing associations or groups where they might meet others who might be interested in going in together in particular types of investments. But no, we are not permitted to do that. We must stick to our self-directed administrator role only. Okay. Are custodial groups such as yourself restricted to handling accounts within a limited region, or do you handle accounts nationwide? We can and do handle accounts nationwide. And I will just mention this because nobody's asked this, but it might come up for somebody as they're thinking about it. you can actually have your LLC, the LLC that we create for your account, you can have that incorporated in any state that you like. We are, as I mentioned, we are headquartered in Maryland, and Maryland does have higher LLC fees, so you may prefer to use a different state rather than Maryland if you happen to be in Maryland. You can choose what state that is, and when we are setting up your account, you can talk with our operations department, and they can give you some, some different ideas about what options are available to you, and then you can make the best decision for yourself. Okay. Okay, can I decide to roll over a portion of my 401k, it's a corporate plan, to a self-directed retirement account? For example, this person's 401k is, for example, it's $50,000. Can I take out $25,000 and put it in a self-directed account? I can't answer that definitively. If you are still employed by the company that sponsors the plan, probably not. But there can be exceptions. What you do need to do is you need to go to your plan administrator and ask them specifically. Sometimes 401k plans do contain provisions that allow you to roll over part while you're still employed. If you've reached a certain age, sometimes that's the case. Or if you brought funds from a former employer's plan and put them in your current employer's plan, some employers do let you take that money out. So every plan is different, so you will need to go to your corporate plan administrator and ask them that question specifically, and they will be able to help you. Okay, this is back to that proof of funds letter. Would you be able to provide a proof of funds letter when getting ready to purchase real estate, even though I may not become the end buyer? Absolutely, yes. We can supply a proof of funds letter at any time. We don't charge any fee for that, so you can ask for that anytime you need it. We absolutely understand that you don't acquire all the properties that you might bid on, so we realize there's a chance your IRA may not be the end buyer. However, let me just add this. We do not encourage using this letter if your IRA LLC is not the intended buyer, because you may have issues changing the name on a bid at a later time. So just think that through and talk with our client services department before you decide what you want to do. Okay, if I am considering a Roth conversion, should I do that prior to transferring or rolling the funds over to STC? And if so, are there additional fees associated with the conversion? It makes no difference to us where you do it. You can do the conversion either at your current custodian or with us. If you do choose to convert through us, we'll supply you with the conversion documents with your initial paperwork. We'll provide you as much assistance as we can with that conversion and keep you posted on the progress. If you do choose to convert once the money's with us, we don't charge anything to do a Roth conversion, so there's no additional fee for that. So you might want to check with who you're holding it with now to see if there is a fee, and maybe that will help you make that decision. Okay, we have time for just a couple more questions. Okay, can I get online access to my account? And if so, what kind of information will my online access give me? And is it real-time information? Yes, absolutely, you can get online access. Because you have an LLC for your retirement account, you'll actually have a detailed financial statement. You'll have a cash balance, what that is, financial statements, balance sheet, profit and loss, and a cash flow statement. So that's all accessible to you. and you can always check your cash balance each day so you'll know how much is there. This person says, I would like to tell my CPA more about your services. Do you work with these types of individuals to set up accounts? Yes, we can do that. We have a variety of collaborative business arrangements that are available to CPAs and actually realtors, financial advisors. So I would be happy to talk with you about that specifically, and we can get you to the right person at corporate if they would like to move forward with something like that. So, you know what, I'm going to take just a couple of more questions since I was had a bit of a delayed start. So let me just see which ones are quite different from what I've already answered. Okay, why do I need an administrator such as STC when there are companies online that will give me a checkbook? I guess the answer to that question would be you're certainly not required to work with a company like STC. You know, if you're familiar with the, you know, if you're very knowledgeable about retirement account investing and the IRS rules and the guidelines, and you know you're willing to risk the tax status of your IRA, you may not need STC. Our role with that LLC is to review and monitor 100% of your transactions so that you don't engage in a prohibited transaction. So that's really a big part of the service that we offer. And okay, I'm going to take just a couple more questions here because I've seen them pop up. Is the money in our account invested through your brokers while it sits like a traditional 401k, traditional 401? We do not have brokers. We do not invest your money. So the money, when you move money to an account with STC, it sits there as cash until you invest it in something. It does earn a very small amount of interest. So this is why many folks do open brokerage accounts and in their self-directed account with us so that they can be investing those monies on their own and then liquidate when they find the investment. But we do not invest your money for you. We are not brokers. We don't offer investments. We don't invest your monies at all. Can I use my IRA funds to make an investment with my spouse? Typically, no. That's back to the disqualified person rule. Your spouse is also disqualified. Your IRA is prohibited from engaging in transactions with your spouse or your spouse's IRA. However, if you co-invest, if the transaction is structured properly, you can invest with prohibited parties at the inception of a transaction. And what we really want to encourage our clients to do is to call and discuss complex transactions like this in the early stages, and then we can provide you with some information, you know, that you'll need to make sure that you're not heading down the road of a prohibited transaction. Okay, one last question that just popped up here. Can I open an IRA if I'm over 60? And what is the minimum initial deposit? Okay, if it's a new account, you can open an account if you're over 60, as long as you are not 70 and a half by the end of the year. So in the year that you reach 70 and a half, then you no longer can open a retirement account. A minimum is $250 with us, but of course you can transfer monies to us as well. You don't have to make an initial deposit. Okay, I think I might have gotten through all the questions that I had. Thank you all so much for bearing with me initially, and I appreciate you joining me this evening. I hope this was helpful for you. I do want to just quickly mention that if you're ready to open a self-directed retirement account, or you have clients or colleagues who might be interested in self-direction, or you simply need more information, please do get in touch with us. You can find my email address online on our website at STC IRA, and I'd be happy to talk with you and assist you. And of course, that you can contact our corporate office as well. But please do get in touch. We would love to help you. And I do want to also mention that we will have another educational webinar in December that will be on Tuesday, December 6th. So that will be on a Tuesday evening, and I hope you will join us. If you received a webinar invitation to this webinar, then you will get one to that as well, and you can also sign up on our website at any time. Thank you all so much for being with me this evening. I truly appreciate it. Have a good night. Good night, everyone.